Oh, hello everyone, and welcome to this afternoon's webinar where we're going to be looking at just the futures today. We've split this session up again into futures and stocks. It just makes it easier. People get a little bit confused about what we do, it's just made it, as I said, it's just made it a little bit easier. Anyway, before we start, as always, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business. Please don't ever think of using money that you cannot afford to lose. As always, we're going to be looking at the charts through the prism of volume price analysis. I know a lot of people who come to these sessions are already aware of the methodology and very kindly have bought the book as well, but in case you're one of the few traders that haven't, you can find all the details in the book, which is up on Amazon. And I don't know how many hundreds, 1,000 reviews now, David? 1,200 reviews. I have to say the overwhelming majority of them are either 4 or 5 stars, so you know, absolutely completely blown away by it, quite frankly. When we first started, when we did this book 5, 6, 7 years ago, whenever it was really to introduce this amazing methodology to as many traders and investors as possible, you know, so that they didn't lose any money, basically, because this is not an industry for the faint-hearted. And you know, if you don't understand what's going on behind the price action, you know, we always say you will be the lunch, as it were, for the market makers and the big players, as it were, and we really don't want that for you. What we've also done is, with the methodology, is we've done lots and lots of worked examples, so you can actually, you know, by looking at them, you can learn to recognize them in the charts. And when I said earlier, we split this between the futures and stocks, and in a way, it doesn't really matter what chart we're looking at, because the principles of the methodology are the same. There are other factors, obviously, we have to take into account when we are looking at the price action on the chart. There will be other influences on the price action, but the technical analysis bit is exactly the same as whether you're analyzing a pair, a currency pair, whether you're looking at a bond, whether you're looking at a commodity, a stock, or that, you know, they may have their own little idiosyncrasies in terms of what type of chart pattern, what shape of chart you may find in one market and another, but the core principles of a volume price analysis apply throughout. Volume, price action, candles, patterns, and support and resistance. The recording from this morning is now up, going up on YouTube as we speak, and I really looked at the Euro New Zealand. You may say, well, you know, what's the Euro New Zealand got to do with I'm looking to the YM, or I'm looking to gold, or I'm looking to silver? Again, that's not the point. It was a perfect example of combining all these elements of VPA with some of the indicators that we have developed specifically to give us those key S&R levels that we need to identify on the chart to allow us to either join a move that is in progress, where that move is likely to pause, possibly reverse. And following on from that, although I didn't mention it this morning, once you know those S&R levels, they also help you not only determine how far the move is likely to go, you know, by looking at price action in multiple timeframes, but you also use it for stop placement, which I must admit I didn't cover in the session this morning, but that's something that we can do another time. And it's certainly covered. Those of you who are our Forex students know that it's all covered in the program that we have put together. So that is your core methodology, on top of which you then use these wonderful indicators that are out there that have been developed by lots and lots of different traders. You know, Bollinger Bands, you've got Gann lines, you've got, you know, you've got Elliott wave, etc., etc. But they all sit as on top of the price action. They will give you other bits of information and you know, another perspective, if you like, of what is going on with the price action. And you really have to apply them in, you know, for the how they in the for the reason that they were developed. So, you know, Bollinger Bands work in certain market conditions. They don't work at all in other market conditions. And you've got to understand what that market condition is. Now, that's what VPA also tells you, because it's based on Wyckoff. It helps you identify when you're in a trend. Are you in a congestion? Is there volatility? Then everything comes together. And we've got the proprietary ones which we've developed ourselves, and overarching everything we have time in multiple, which is basically time for frames, and also helping to time what is happening on the chart itself, right, by using all these elements that are down here. Right, just take that down for a second. And really what I've done here, what I have here is I'm going to look at the futures purely using the MT4 platform, and I really do urge anyone, if you're thinking of, you know, you want to trade futures, you want to trade gold, silver, oil, the softs, the indices, whatever, this is really an absolutely fabulous place to start. First of all, you can, you know, nearly all MT4, MT5 brokers offer you access to these markets. You get a derivative, you get a version of the actual futures contract itself, and it is a great place to practice and see how you get on with a particular future. You can also decide yourself, you say, well, actually, am I an index future? Of the three indices, the YM, the NQ, and the ES, probably the most tricky, I would say the most challenging for a new trader would certainly be the ES, which is based on the S&P 500. That's where, you know, there's a ton of algos in there. It's just, you know, if you don't know what you're doing, that is something maybe to aspire to. The NASDAQ probably sits in the middle. But the YM is, David and I have a particular fondness for it. We've always gravitated to this index, and the reason is it's a bit more measured, and you know, you're not going, if you're a newbie trader, you're not going to be scared off. So you can try it. Then you say, well, actually, I'm not keen on index trading. I think I prefer gold or silver. I won't pull up all the ones that are available on this platform, but it gives you a chance to rotate, get a feel for that particular contract, then go and, you know, this automatically brings up the the contract. You don't have to worry about you know, rolling over a contract. Just test it, you know, see if it appeals to you and if it works for you, and then perhaps think about opening an actual futures account, you know, putting some money aside to trade the actual futures with a broker. And then we would always say start with the E-minis, which are the smallest contract possible, because as we always say, in our Forex program, this at the beginning, this is not about the money. This is about developing your tactics, becoming consistent, looking for pips, consistent points, pips, which will then give you confidence, and that's what you build on. Right, now I have actually got here, I have got the US 30, which is the June, as you see here, it's the June 21 contract, so it's the most up-to-date contract. The platform automatically does it for me. And I have my 5 charts. I've got the daily, the hour, the 15, the 5, and a Renko chart. The other thing about MT4, you do have limited time frames available, but actually when you're starting, it's probably not such a bad thing, because you can be overwhelmed with seconds charts, you know, minutes, and go and just, you know, it kind of forces you to sort of to be a bit more measured, if you like. So before we start, let's go and see what's going on at the moment. And the really markets are waiting for today. I'm going to use this economic calendar. It's the FOMC minutes, and it's the minutes of the last month's Fed meeting. And of course, there is only one topic of conversation in all the media, fund managers, you know, Uncle Tom Cobley and all, and his dog, and that is inflation. What is happening with inflation? Do we have inflation? Is it the right kind of inflation in terms of, according to the central banks? You may have heard that the banks, the central banks, were saying, well, it's only transitory, it's only temporary, because the metrics they use to make decisions about interest rates, this is all about interest rates now, not necessarily what you and I have to pay the services and food that we pay on a daily basis, because they consider that data it's too volatile, and you can't base long-term decisions on it. You and I may disagree with that, but that at the moment is how the banks, everyone has to base a decision on something. What they look at is employment, our wages rising very, very strongly, because people ask, but the thing is, it's like in a way, if you think about it, it's kind of a bit of a blinkered approach, because if your cost of living is rising substantially, your food bills are going up, and soft commodities, because soft commodities are going up, and with the virus, there's been a problem with what they call the supply chain. Producers they didn't know how to manage during the pandemic that we had last year and are still in, basically. So there's gaps in production. People have lost their jobs, and people who so prices are rising anyway. I believe if you have in the States, you have to pay for private health, insurance, etc., etc. A lot of stuff is expensive. Now, you could argue then everything, cost of living is going up. Well, I need more money from my wages. So, you go to your employer and say, I'm sorry, but I need, you have to pay me more because I can't afford to live. So that then, now, if that metric is going to go up substantially, perhaps that's when the central banks pay attention to it. Now, how does that apply to trading on a day-to-day basis? Well, it's going to impact what is happening on the chart that you see in front of you. So we've had this issue, this inflation narrative, which is now everywhere. Do we have inflation? And some stocks, some indices are more susceptible to a potential rise in inflation. You also have to remember the stock market is a forward thing. It is always ahead of what the price is at the moment. It's kind of almost baked in. So if it thinks 6 months down the line there is going to be an increase in inflation, it will react as we see the price on the chart at the moment. So that's kind of spooked the markets. We still have, certainly here in Europe, in the UK, we still have a problem with the virus. It hasn't gone away. It's not going to go away. We are going to have to live with it. There's these awful things in India. If you see some of the poorer countries such as Mozambique, they are really, really suffering. So, we're very lucky here in the UK. We've had our vaccines and life is kind of returning back to normal, but there's a lot of uncertainty, and this thing isn't going to go away. So that's going to have an impact as well on the economy. You've got employment. The NFP data was absolutely dire. The number of jobs, they were expecting 1 million jobs to be created. It was less than 200,000, David, and what have you. So are there no jobs? Are perhaps people, perhaps they've been, we have here people on furlough. Maybe they don't want to go back to jobs. Who knows? Just to give you an example of this, what's happening in the real world with regard to, the supply chain. One of the hamburger companies in America, I can't remember which one, but it's it's like a fast food. It wasn't McDonald's, and basically they've had to restrict the number of free sachets of I think ketchup or something to their customers, because the factory that makes them, people haven't gone back to work, and whereas before you could help yourself to 5 or 6, you're only allowed 1. It's that. I know it may sound a frivolous thing to mention, but that is the kind of the problems that the virus has caused in what we call the supply chain. Stuff not being where it is, people not back at full-time in their jobs, and that feeds into the inflation narrative. Now, the most important thing today as well is, as I said, the FOMC what you have to remember with whenever the Fed is involved with either the interest rate, the interest rate decision in the minutes, is always check your futures to see how it reacts moving into. So you will always see some action certainly at this time and at the open, but as the minutes, as you come up to the minutes and they're going to be released, the market will simply calm down and wait until the actual release comes forward. Right, very, very quickly. Going back to what I've got here, which is this is the equivalent of the YM, which is the Dow Jones, the US 30. This is the futures contract. As I said, what we talked about this morning is on the Euro New Zealand, and it's well worth listening into that recording because it was about the Euro New Zealand has been in a really nice move, sort of 3 days. This is the third day. So it's been a breakaway from what we call the volume point of control, from a congestion phase. What do you do when you see these moves? These are 24-hour markets. You've come to your desktop or, your trading machine, right, well, the move, what's going to happen next, basically? Do you look? How do you try and establish a point where you can join the existing move, or do you actually sit back and wait for a reversal, basically? And that all depends on really what you are seeing. First of all, on the daily chart. Now, this is as I said, this is the equivalent of the YM. There's also a piece about this on my blog. And what we wrote earlier on this week was these two up days. We had this sort of sell-off from the shooting star candle. You had these two big sell-off days. And then we had the buyer stepping in. They actually came in at the volume support here that we see off the VPOC. You've got this nice tail to the bottom of this candle. This was Thursday, pushed the price up. Friday, it went even higher. But the clue is down here. If we look at that volume under there, there's clearly buying under there, but there really wasn't. Although the price action, there was follow through on the price action, it didn't really reflect. It was a bit of an anomaly. What we actually wrote was, well, it looks okay, but, and in fact, it came about on Monday. This is Monday, this is Tuesday, this is right now. What's also happening, what's interesting, it's gone back the other way. So we had prices going up on, but it closed lower. Then yesterday was a down candle, but on lower volume. Then we've got this candle developing, but look at the volume. It's kind of falling away. It is also at this support here on this, what we call volume support. We use volume support and price-based support. This is the volume support that is delivered from the volume point of control, which is this indicator here. This is the zone on the chart where there has, if you like, there has been a consensus around. It's been a range bound, between the buyers and the sellers, as it were. I did think at one point the VPOC would shoot up here, but this congestion phase is not as pronounced as this congestion phase here. So if that had jumped up to there, then this would have definitely been bullish, because this also acts as support and resistance in its own right. These bands that you see here, these levels, they mark the points at which we have low volume nodes and high volume nodes. And the difference is in the depths of the histogram. You see, this is a very narrow one. If this price goes through there, the chances of it moving very quickly down to this support level is pretty high, because there's nothing in the way in terms of support. There's no cushioning effect to hold the price up, to let it struggle a bit. So to get from here to here could be quite a fast move. It would certainly be a faster move if it has to sort of go through this this bit here, and of course it works in the opposite direction as well. So we are in a sort of downtrend at the moment based on these three candles, but we do have falling volume. Well, we don't have a lot of volume under the candle that's been forming at the moment. Then we go to the hourly chart. Now on the hourly chart, I have actually put the VPOC on as well because I wanted this volume support to come in as well. But I've also included our Camarilla and our S&R lines on here. And this is where the Camarilla really and the VPOC come into their own in terms of perhaps considering joining a move that is already underway. And the two levels that are possibly the more important, it's a bit like Fibonacci level. If you use Fibonacci, fine, but Fibonacci has a hierarchy, and all traders accept that if a price gets to the 50 or the 61.8 or whatever, then the chances are it could possibly reverse. So the two key levels for Camarilla are the S3 and the S4, and the kind of rule of thumb is, you will see here, this is the break from, it's ES1, but it's also the volume point of control. So it's a breakaway trade. I know the volume looks a bit sort of spotty down there and doesn't look like terribly, nothing, terribly to write home about, but you have to remember this is in the Asia session, so participation is always going to be a bit lower. So we don't trade the Asia session, so we can see that it got to the S3, the third level, where it pauses. Inevitably, it does go through sometimes if markets are volatile. 9 times out of 10, it will pause and it will simply congest before deciding to break lower or to reverse. Now, this is the level that you can consider if it breaks away on a rising volume, which I think we got down here. Let's have, this is the hourly chart. Yes, in fact it broke. We had a lot of volume down here. We had volume, and you say, well, that volume is falling away. Yes, I accept that it's falling away. And then we have a little up candle here. But if that is actually going to reverse again, you would have expected that to move more than it did. In fact, it congested at a support line and also a volume line that you see here, a band here, and you simply have to wait. Yes, we did see falling volume, I accept that, but this is where you use your support and resistance in conjunction with what you are seeing on the chart. And you never go off one candle. Is that going to be no, we just wait for the next candle. Then that broke through and the volume has increased the substantial amount to bring it further down. Now what's happened is volume support has come in again based off the volume point of control. Now, when I said this also gives you potential targets, well, the potential target is here. This is the hourly chart on the S4. We are also just coming up to the open, so it's not surprising to see a pause point, but the pause point also coincides with, as I said, the support and resistance derived from volume. I've got the 15-minute chart. The values on the 15-minute chart are calculated on a 24-hour basis. The one on the hourly chart, these levels here are in play for the rest of the week. So in advance on a Monday, these are the levels that are in play for the rest of the week. And what it is, the way you trade is an interplay between the two. Sometimes the levels are taken out in one day, in a couple of days. The hourly ones are no longer valid. The price has gone through. You then step down onto the 24-hour ones. Right. I've got the 15-minute, the 5-minute here, and I've also got the Renko chart. The Renko chart, this is, again, just another example of how we would use these levels. Now, the third level didn't actually come into very much into play here, but this is like 1 o'clock in, this is this period in Asia Pacific. I'm in here, I'm down here somewhere, so I can use the R1, which is not as strong as a decision making level as the S3. So I could look here. I've also got my trend dots. What I want to see is a clear match between the trend dot and the trend monitor. And I've also got the S3 here, and that would be a nice point you think, okay, well, you think, well, you know, well, I've missed all that. Well, yes, I have, but then I'm only interested in taking what I consider to be a conservative trade that will, you know, it's pretty much not guaranteed. There's nothing guaranteed in trading that will, you know, that will deliver a nice move lower. Now we're seeing this potential reversal. Exiting using this is really, I would consider, I'd move away and I would use the time chart. Now this is the 5-minute chart. This is the move lower. It was actually from the volume point of control. I don't have the levels on here. I have the levels on the Renko. The Renko keeps you in play. It just holds you through these pullbacks. But what do we see here on the 5-minute chart? We actually have two candle patterns here, and we have, first of all, we have volume support from the volume point of control. We have a tweezer bottom, and a tweezer bottom and tweezer top, they are great signals. It's a 2-bar reversal, but it's also on a tweezer bottom, and this is where I would look to that and I say, yeah, it's been, you know, it's not been a huge move, but enough. As I said, with the YM, it's nice and steady as she goes. And you know, you take, by putting it all together, looking at the daily, looking at the levels on, as I said, the hourly, looking at the levels on the faster time frames, and using the Renko for your entries and your faster, as I said, I've got the minute here, and using levels again. And also, this is a lovely example of a tweezer bottom and a 2-bar reversal. Right, I think I'm going to pass over to David, because I think, are you going to look at gold? I have gold here. I've got all sorts. David's got all sorts, but gold, again. Now, what's interesting about gold, it's been a lovely move higher, and we haven't talked about volatility today, and it looks like great. It actually came off the 3rd level, fantastic, straight through the phone, but it triggered a volatility candle. The price action was outside of the average true range for this time frame, and what has happened straight away? Bang, straight into the spread of that candle. But what's also interesting, going back to our daily, look where we are on gold. We are at the outer limits of the volume point of control. And another little thing, I don't have, as I said, I have used moving averages in the past, because, you know, the 200 is the iconic one. You know, the media is always writing about it as well. We've got rising prices. We also have a little bit of falling volume here, but the support, that tells us that it's likely to stall here anyway. Does that mean you don't take a trade? No, because if you're on the faster time frames, it's down to what time frame you are. But possibly on an investment perspective, well, you know, this is clearly now a point of resistance. But this is the 200 MA, and someone emailed me today, one of the newsletters I get, and made a very interesting point. The 200 is often the benchmark for, you know, a strong bullish or a strong bearish. And this is the first time that gold, if you look at it all the way back here, it's the first time it's been over the 200 daily moving average since February, which is actually really interesting. And the move from a longer term perspective, you've got a really nice double bottom here. You've got a 2-bar reversal up. Yes, it went, you know, you have this sort of, it went back to retest it. We have a 2-bar reversal up here. For day traders, you know, that is perfectly tradable. For an investment perspective, well, that's just, you know, a lift off. I'd have to look at the faster time frame charts at the time. What do we have here? We have some volume going in there, but we've got this is like you've got wicks to the bottom, wicks to the top. You know, you really have a congestion phase here, and then you have a sell off the resistance that you have here as well. I don't have the going back to 30th of March, the Camarilla levels. I wouldn't have the levels at the time, but I suspect they would have coincided with some key Camarilla levels as well. And it back to test it, nice 2-bar reversal. You've got a couple of little tweezer bottoms there, but they're quite big candles. 2-bar reversal, and it's really been in a nice move higher ever since. And it got through the dreaded 200 MA. Right, I'm going to pass it over to David. As I said, he's got all sorts over there.
You can if I switch my microphone on. Hi, everybody. Anna said, can you hear me? Oh, cool. Sorry, that was the starting bell just going off in my ear. Got Tradestation running, apologies. So it's literally markets just opening up on the cash markets. So hopefully you can hear me okay. Sorry, I just want to pull this over because this, I know we're moving out of futures, but just very briefly, this is on TradingView. This is pound yen, and it's just an example of what's required if you're going to trade congestion phases, and this could be any chart you care to name, happens to be the pound yen. This is where it's been trading pretty much all morning, up and down, very tight range, and then it breaks away. Fantastic, strong platform of support was in place. It's breached, collapsed, wonderful price waterfall. Buying coming in. You've even got a little tweezer bottom here, although the tweezer tops and tweezer bottoms tend to be more effective when you use them on even slightly faster time frames than this. But nevertheless, you've got two little hammer candles there, lots of buying coming in. So you're expecting some buying, which you actually get. But is that buying strong or weak? And it's pretty weak because the volume's fallen away, the market's risen and it's fallen away. But I just wanted to show you that if congestion trading, if you have the patience, and you have to be patient. But if congestion trading is a tactic that you like to employ, and it's very powerful, because the flip side is, yes, you have to be patient, but that patience is rewarded with trends, because trends are born in congestion phases. For those of you in the education program, on the Forex education program, you'll know that anyway. But the other beauty of it is that it gives you, because you've got a channel, it gives you very clear levels of support and resistance. Where do I set my stop loss? What am I looking for in terms of a breakaway? Is this floor strong enough? Once it's, how far do I get away from there? Where do I set my stop loss? Well, up here somewhere, maybe even higher. And you've got this huge wedge of price action, which, as the market breaks away, it often retraces back up and tests a region that's been in congestion anyway. But you've got this massive wedge of price resistance overhead, which acts as a barrier, and just very clearly defined areas for placing stop losses and what have you. I just wanted to show you that because it's just a wonderful example. I was watching it while Anna was talking. Just collapsed out of sight. Can't what? I've got my microphone on. Hopefully everyone else can hear me. Oh, it's back now. No, it's back apparently. Yep, it's back. Great, thank you. Excellent. As long as you can all hear me, that's great. You might not want to, I don't know. Hey ho. Let's just start with the major indices. Anna was looking at these as well, but I've got the three strung out here. I've got the YM, the daily, the NQ, the daily, and the ES on the daily along the bottom. Just tidy that up. And on the top, I've got the 5-minute equivalent. So we've got the YM, the NQ, and the ES on the top line. And as you can see at the moment, there is some divergence. The NQ is trying to rally, the YM is still falling, and the ES is at the volume point of control. So no great surprise that it's in congestion at the moment. But the key thing about these daily charts, I mentioned it this morning, the real key thing about this, and it was the reason I explained this morning why we closed out the positions we got on that micro account, which is purely based on sentiment, nothing else. It's just looking at sentiment every day. We're going to go long, we're going to go short. What are we doing? If you look at these 2 days here, look at the volume under here. I mean, you had this great up day here, fine, volume's fine, no problem at all. And then you have the follow through on here, and the volume's fallen away dramatically. What are you expecting? Well, it doesn't look terribly strong. So the price action we're seeing right now is hardly a great surprise. And so we closed them out and just going to sit tight, might go short. My overall longer term perspective is we're still in bullish uptrend for the time being, but you never know. You just have to trade it as you see it, and that's where we are at the moment. So the NQ's come down onto the VPOC, but exactly the same profile there, and even more pronounced, in fact, on the NQ, because we had a huge widespread up candle with, again, the volume falling away. So what is that telling you? Well, it's telling you there's no great follow through. There's no great desire in terms of the market makers or the big operators in terms of buying into that particular rally at the moment, and exactly the same on the ES here as well. So no great surprise to see what we're seeing at the moment, which is, it's been bearish throughout the morning. And just to pick up on the point about ease of trading, We get a lot of volatility, get lots of volume coming in now, lots of volatility at the cash market opening alongside Globex. But Globex trading in isolation, you can see the price action here. It's pretty steady. There's no great shock waves, there's no huge volatility, but now we'll start to see it with, with all the EAs coming into the market. Here we go. Ton of volatility coming in, lots of volume coming, big surge in, and you just don't see that. If I just pull that up again, this sort of price action is it's contained within the first 10, 15, 20, 25 minutes of the cash markets opening in Globex, but you don't see it through here. So why is it that people think it's difficult to trade on Globex alone? It isn't. Yes, the volume is all being compressed down to quite small, but prior to that, it was perfectly fine. So it's perfectly tradable. The other thing I'd also say, just to pick up on what Anna was saying about the micros, the MES contracts for indices are hugely popular. They were introduced last year, or maybe even the year before, I think. Let me just check. I think it was last year. Yeah, I think it was last year. And they are very liquid, very well traded. So you get nice, smooth price action. And you're trading 1/10 the contract size. So whereas you're looking at, for example, on the YM here, you're looking at, this is the smaller of the two. There's a small and a large contract size. But if you're on the YM regular, it's $5 a point. If you're trading the micro, it's 1/10 of that. So it's 50 cents a point. So, it's much less scary in terms of big swings, in terms of price moves. So I'd urge you to have a look at that. If you are trading indices, it's exactly the same as in Forex. Start with the smallest contract you can find. They were never available a few years ago. When we started trading in FTSE futures on the Liffey exchange, we were trading £10 a point. That's where we started. We didn't have the luxury of trading £1 or 50p or whatever. We had to trade £10 a point. That was it. That's where you started. That's where you cut your teeth. And it was the same on the US indices up until a few years ago. Now these wonderful micros, 1/10 the size, so it's exactly the same. Trade the smallest contract you can find. The problem you'll find if you're trading other contracts like gold, for example, the MGC is less liquid because it's less heavily traded. So you'll find the price action can be quite spotty. It'll sort of jump around. You won't get smooth price action. But on the MES contract, on the the micro NQ and the micro YM, you will. Absolutely fine, no problem at all. Lots of volatility. It's what we expect to see. Expect to see this jagging about. You have to wait for the market to settle. I've got Tradestation down here. This is I've got the two here. This is the currency futures on one side. I've got those there. I've got the NQ running here. You can see on the bottom, this is trading off this is attached to the Interactive Brokers account. So what you're seeing here is basically all the contracts going through that have actually been placed. These are live contracts. These are orders executed. This is not a ladder of potential. This is actual executed orders going through above and below the bid, the asks, at the bid and the ask, and the actual contract sizes. You can see them going through there. The ones not interested in the ones and twos, you're really looking for any triples or big doubles and how that affects the price action. But you just have to wait for all this to calm down because there's a huge amount of volume coming in and it's just surging through on that particular time and sales window. And it's just another way to trade. I'm not going to focus on it now, but it just gives you another perspective on the volumes going through. You can see a 53 went through there. You're just looking for the big numbers that are going through all the time and how the market reacts accordingly. And also, more importantly, whether they've gone through between the bid and the ask, whether they've gone above the ask, whether they've gone below the bid, and how that has been reflected in terms of the associated price action. We've got a big volatility on spike. This is on 5 minute. Up at the top here, I've got this on radar screen. I've got this through from 1 minute right the way through out to the dailies and the weeklies. I've got the trend monitor up here on the radar screen, and I've got the quantum trends. And it's just a terrific visual way of seeing how sentiment shifts from the fastest time frame through to the slowest time frame. And in addition to that, I've also got the quantum volatility over here. So again, it gives you a heads up as to, you get a volatility trigger, you just click on it, find out what it was, gives you that opportunity. If I'm not in the market, am I going to wait and see? What am I going to do? Just wait, be patient, wait for it to clear. Is there an opportunity to trade? Is there a reversal coming up, or am I just in congestion, etc., etc.? So you just get this wonderful visual picture. And of course, because I've got it linked here over on symbol and interval linking, you can just click on any time frame you like and it just goes straight through it. I'm on 5 minute there. If you want to go down onto the 1 minute, just click on that. Just click on there. I've got so much data on there. There we go. Come on. No, it's not going to go. Let me just try it again. No. Normally you can. It should work. Obviously, I've got these symbol linked and interval linked here and over here. Just trying another time frame. No, I've got so much stuff here. Right, let's drop that out of the way. Let's get rid of that for a moment if I can. There we go. Back to the NinjaTrader. Lots of volatility, as you can see, as you would expect. We just have to wait for all that to calm down and for the market to essentially move away from these regions and just give us perspective on where we are heading next. It's very bearish at the moment, as you can see. Doesn't mean it's going to be bearish for the whole session. It's just a question of waiting, being patient, wait for these levels to be breached, break away from these regions, away from the volatility, wait for it to calm. And as Anna said, when you get to these levels on the VPOC, on all the different time frames, let's go over onto the multiple time frame window. Where are we? There we go. Right, this is on, I've got the YM here. We're now on 15 second, 1 minute, 3 minute at the top, 5 minute, 10 minute, and 15 minute down at the bottom. Pretty bearish, breaking down. 15 second is a chart I love to use. Again, I've got time and sales running down here, but I won't concentrate on that. Just want to concentrate on the price action and see where we're going. And the trend monitor is bright red across the time horizons at the moment, and it's no great surprise. See as it develops. And of course, I've got that on the Renko, and I've also got that on the, this is on Renko. And with the Renko optimizer, running it in this way across multiple timeframes, basically what I've got is I've got a Renko matched to the time frame at the bottom. So I've got a 15 second here, I've got a 30 second here, and I've got a 1 minute over here. So I can apply VPA analysis down the bottom here. I've got all my indicators, and then I can adjust this to, or select the optimal brick size for that particular time. So if I go to the 15 second, that will deliver the optimal brick size at the moment, which is quite big, 16 at the moment, because you've got a lot of volatility. Just click on that. So that's bringing up a 16 brick box size, which is either $80 or $8, depending on what contract size you're trading. Let's go up onto the 30 second, just do the same there. This will be slightly slower. Click on that one. Okay, so that's bringing up a 20. So this is basically 20 points. And if you're on the ES, it would be ticks. And also on the NQ, it would be ticks. Just go over onto this one. Click on the minute, do the same thing. And you've just got to wait for this market to settle. We're trading around the volume point of control on all these timeframes right now. So we're expecting congestion, sideways price action. Market's got to settle, and we've also got the big news later on. So it's a question of deciding whether the market is actually going to deliver something in this time frame, or whether you're going to have to wait until the news later on. Let's go back onto the time frame for a moment. Let's have a quick check on the other markets. This is oil. We write and trade a lot about oil. It's hit this level on the daily chart. This is a key resistance level. This is on the weekly time frame. You can see how strong that level is. It just cannot get through. It's tested it again. Just move the chat box. Oops, just want to move the chat box out of the way. There we go. It's tested it again. You can see it here. Get rid of that. It's tested it again. It's just testing that level the whole time. And that's it on the weekly. Let's just change that over onto the daily. There we go. That's what's happening on the day. Similar sort of picture. Very weak. It cannot get through that $65, $66 per barrel level. And it's just constantly battering away, trying to get through, and it cannot. Nice trend developing. Just have a look at that on the 5 minute time frame. You can see how weak that response is in terms of the volume rolling over. There's more selling than buying. Trend monitors transition through to red. We had the volatility trigger, came in, the market reacted, reversed inside. Now we're rolling over again, more to come. Another volatility trigger on 1. So if you're trading over here on the 15-second, we got a volatility trigger, ton of volume coming in under that one. You know, is that going very far? Unlikely. A huge amount of volume under that particular candle, then nothing under the next one. So what is that telling you? Well, it's telling you, you know, it's not going to go very far, because if that were going to deliver, if that was your benchmark candle, then, you know, this one should have that and probably some more. So clearly there's a huge amount of effort gone into that particular candle, and it just hasn't gone anywhere for the time being. So, you know, is that buying or selling? That's selling in that candle. You know, there's some buying coming in here, but the effort to rally, it's the analogy we always use is of a car driving up an icy mountainside, and as the steepness increases and you're applying more pressure to the gas, eventually you get to a point where you stand still and the wheels are just spinning because you're applying a huge amount of effort, in other words, acceleration. But you're not moving forward. There's no momentum, and it's exactly the same principle here. You're putting a massive injection of effort into that particular candle. It's not gone anywhere, because by all things being equal, if you look at, you know, you're looking over here at what else might have delivered that equivalent amount of price action, or the volume required. You know, you're looking over here. So remember, this is 1430, so we can compare volume in here. So in terms of that sort of price action, I don't know, you might be looking at something like that, where you had this sort of level of volume, but you've actually got that sort of level of volume. You know, it just doesn't make sense. It's anomalous, and that's what we're looking for the whole time. We're looking for anomalies, things that just don't make sense. So have a quick check on gold. There was a nice run up. It's gone into congestion, I think, at the moment, but still we're bullish longer term on gold anyway, and the same is true of silver. There we go. Okay, we're picking up again. It's nice. On up we go. We went into congestion. We had a volatility trigger on 5. We had this nice run up. Then we had lots of volume. You always get heavy volume. If you don't get heavy volume with a volatility trigger, then it's a trap move. You've got lots of volume in here, so the big operators are playing in this particular one. And now we're on up again in the bullish trend, which is nice to see. We're talking that one up to $2,000 and beyond longer term. So that's really nice. And again, you can see across the time horizons, you know, bullish on the trend monitor, bullish on 15 second, 1 minute, 3 minute, keeping you in, down to 5 minute, and hasn't flickered at all in this congestion phase that was down here. And, you know, same down 10 onto 15, and this is out onto the daily. Nice wick to the lower body there. You know, we're pushing up towards the top now of the volume point of control histogram. We're getting up to those levels where we need to step down and look at slower time frames. So we'd be moving down, look at the weekly, and then down onto the monthly to give us some targets. But as far as we're concerned, this is going through certainly on up to 2,000 longer term and beyond, probably. And a large driver for that will, of course, be inflation, as Anna said. Inflation is, you know, top of the, it's kind of, for those of you on the program, on the Forex program, you'll know that within economic cycles, fundamental news has a rotational aspect to it in terms of priority and importance. And right now we are in a cycle whereby inflation has risen to the top once more, or near the top at any rate, and is starting to take the headlines, which is why there is a lot of uncertainty and risk. And which is why assets like gold particularly will start to benefit if that inflation driver really does start to take hold. The nice thing with gold is if you're trading gold, then why not look at silver, because you'll see pretty similar price action. You know, it's it doesn't always, they don't always mirror one another. They don't always move around with the same sort of degree. You will get variance in terms of the price action, but generally speaking, you know what you're looking for, and all the time when you're trading futures and commodities, you're always looking at what is going on in terms of the US dollar, obviously, because there is that correlation. Let's have a quick look on softs. Softs have been rampaging. They've come off a bit. This is on this is the ZS, the ZC, and the ZW. Let's go to, it doesn't really matter which one we pick because they've all been doing pretty much the same thing. This is soybean. We've had a top go in, heavy selling, no great surprise. We've had this tremendous run higher, and it's been going on for longer than that, than in, you know, the last couple of months or so. Now starting to see some profit taking coming. Of course, some commodities are going to be related to a lot of other assets as well, or a lot of other drivers in terms of what is going to dictate the price action for softs, particularly. There's all sorts of growing seasons, weather patterns, all the rest of it, supply and demand. It's all down to supply and demand, and trading softs is just a fantastic way of getting close to a different market whereby different drivers are important and will dictate the price action longer term. But intraday, it's exactly the same principles. You're looking at, when you're looking at buying and selling, you're looking at the volume price analysis relationship. We've got a big volatility trigger there, lots of volume coming in. There's some buying coming in here. We've got a volatility trigger here. We're going to see maybe some congestion following that, et cetera, et cetera. On it goes. It doesn't really matter what's at the top of the chart. Let's just go back on to see what's going on in terms of the indices themselves. Still trading around a tight range. It's what we expect. There is some divergence. The NQ is trying to rally. These are not at the moment. They look more bearish, and the NQ looks a little bit more bullish on 5. It's coming up to an area here, which has been tested over here earlier on in the day. And if we get through that level, and this is what it's about, it's looking at levels and saying, okay, well, if it gets through that level, what have I got in the way of a particular trade? Is it worth taking that trade? Well, the short answer is yes. Why? First, because you've got volume falling away on the histogram. So in terms of where it's like to go to, or in terms of what is going to cause a barrier to that price action, this is falling away, which is great. So it's not going to provide resistance to that move. And in addition to that, when you look at these levels on the accumulation distribution indicator, they're very lightweight. So in terms of moving from, where are we, this level all the way up to this level, there's pretty much nothing there from a technical perspective that is going to cause it to pause at the very least. So the key level is this one. If we get through this level, we're on 5 minute here. So if we get through this level, then you could say, okay, fine, we've got some, we've got some decent support in beneath us. We've got this, which is falling away. We've got no price-based resistance, which is going to come into play. So, it's an opportunity. Maybe we jump in at, I don't know, 70 or 80. Once it gets that sort of level, maybe grab some points up here between 80 and 120, because it's not going to hit anything serious in the way of objects that are going to cause it to pause. That's against the backdrop of what is going on elsewhere, which is fairly bearish at the moment, but that's not to say it's going to be bearish for the whole of the session. You've just got to wait for all this price action either to break away from here or to see whether it's going to go sideways for the rest of the session until the FOMC in another, 4 or 5 hours time, and we'll see what comes out of that. Where are we going? Let's just check it back on gold, see if that's still on the way up. Come off a little bit of weakness coming on that particular candle. You can see there we had volatility carried on through. Might not be able to see it, but there is a little wick to that upper body. So you've got decent volume under there. So expect a little bit of weakness. Does it mean it's going to reverse? No, not particularly. It's just, it's selling. People are profit taking and getting out, and other traders will be jumping back in on a reversal pullback. I do it all the time. I'm looking for reversals and pullbacks in an upwards trend. I'm looking for an opportunity to jump in when the market reverses a little bit, and then jump in and continue on in the trend higher. As I say, we're bullish on gold longer term. Got a long way to go yet, we believe. Let's just go back to TradeStation. Let's move that out of the way. There we go. See where we are with the currency futures. And the nice thing with having these are the currency futures, 6A, 6B, 6C, 6E, and 6N. So we've got Aussie, pound, this is CAD dollar, this is Euro dollar, and New Zealand dollar. This just gives you a straight through picture on the dollar. Are we seeing buying of the dollar, or are we seeing selling of the dollar? And it's instantly visible because your trend monitor across these time frames, up to 15 minutes at any rate, has all gone blue. So we're now starting to see, as you can see, this is Euro dollar. We're now starting to see the dollar sell off. Just have a quick look over on the other side, see what the DIX is up to. Yeah, the DIX is selling off pretty strongly now. This is what's happening on the DIXY. There we go. So whereas this morning we had strong dollar buying the whole time, so there was a lot of it was great trading on the pairs, on the majors. We're now seeing that coming into play. So if we're seeing the dollar selling off, and we're also seeing the VIX starting to sell off as well, which we are, I think. Just check on the VIX. Where are we? Can't find it quickly. Where's it gone? Yes. So, you put those together, what are you seeing? Well, that's why you're seeing what you're seeing here, obviously in terms of euro dollar. Sorry, pop that up both sides. There we go. Drop that back down in there. That's why we're seeing what we're seeing there, because the dollar's selling off strongly. Obviously, that's going to have an impact on commodities. It's also going to have an impact on indices, because if the dollar is selling off, generally speaking, strong dollar is not good for equities. So if the dollar is selling off, we're also seeing the yen selling off here as well on the 5-minute, then that's an opportunity to maybe jump in and look for an opportunity to trade long in terms of indices. Right, we are literally running into the back of the next webinar. Just move that out of the way, get that out of the way. There we go. So, potentially we'll see a reversal opportunity, as we do in Forex all the time. Maybe it's a reversal opportunity in terms of equities to grab some points out of this to the upside. We will see. Very quickly, got the next webinar in 5 minutes. This is where you find all the indicators over at quantumtrading.com. MT4, 5, NinjaTrader 7, 8, TradingView, and TradeStation. Okay, no worries. Okay. No, that's it. Anna's just going to bump me off Ninja. So that's fine. This is where you find them all. TradeStation 9.5 and 10. So that's TradeStation Global, which is hooked into the IB account, which you saw there, and also TradeStation. That's Anna kicking me off. That's okay. And also TradeStation 10, which is TradeStation Securities version 10 and above. All the indicators there, all available for Radar Screen as well. Very powerful platform, and Radar Screen is just an awesome application on that particular platform. This is the education site, Quantum Trading Education. That's where you'll find all the details of the education program. I know we have some of our students on this call at the moment. Complete Forex trading program, and it's now associated with the funded Forex program, where you get to trade our money from 5, 10 or 15,000 right the way through to 2 million. You earn while you're trading as well. You get a kickback of profits too, and it's at no risk because you're trading our money. Finally, that's Anna's site, annacooling.com. You'll find all the details on the various posts there, all the books up on Amazon as well, and all the links to the various sites too. So that's it. Hope you've enjoyed this particular webinar. We are literally coming back in a couple of minutes time, so we will probably see you there. If not, enjoy the rest of the session. Thanks very much indeed for coming along today, and we will see you soon.